All right, traders, within this video, we're going to be recapping the trades that were made today. We're going to be going over an in-depth price action analysis on the SPY and where we're expected to move forward. This is also going to prepare you to trade the best setups at the best prices heading into the rest of the top option weekly plays for the rest of this week. Monday and Tuesday were overall slow and choppy. I didn't like the price action, really didn't do too much there. But in terms of today, the price action was spot on. The volatility was there. There was highly predictable opportunities to use the gap fill strategy on SPY, where you play for that gap to fill below with the puts, and then once it fills the gap, look for the bounce, look for the reversal, and then once Powell started speaking, SPY started ripping up towards that 2 to 2:30 p.m. Fed situation. So with that being said, I'm going to show you how you can trade the SPY both ways using two unique gap trading strategies that I've created. We're also going to be going over how to trade the best setups at the best prices with the top weekly option plays heading into the rest of this week. Wednesday was expected to be a phenomenal day for me within the chat, within the Discord. We went over this, and Friday is expected to be a phenomenal trading day. Trading the same day weekly expirations like I did today on the SPY, crushing it both ways several times. Very quick in and out scalps. Had one 40% win, had one 22% win, and then I had a couple small wins with 8%. Had one bigger loss as well. But there was just so many wins. Like I made over like 10 very, very quick scalps today, and the win rate was over 80%. And the timing was perfectly. I'm going to be sharing with you what I did right and the mistakes I made as well. Today was a very, very nice green day on the portfolio. With that being said, let's get right into it, guys. So in terms of the SPY, let's go over the SPY here. So, what we saw occur today, right? Let's get into this. If you've been looking at the pattern, so in terms of predictabilities and in terms of patterns, where has the resistance been? Where has the resistance been for the past 2 days where there's big downside potential? The first level and the best level is going to be right here at $381. Key resistance, big downside potential. It went from 381 all the way to 375. And right here, it went from 381 all the way down even lower on the same day to 373.60s. Now, study what happens, because the similar thing happened today. Yesterday, Tuesday, we had a gap up. And what happened? SPY filled the gap, and then once it filled the gap, it had a mini reversal, and then it shot up for new highs, right? So there was an opportunity to play puts to fill the gap. There was an opportunity to, play calls for the quick gap close reversal. In and out, super quick scalps. If you're doing these on weekly expirations on the contracts that expire the same day, these can print. We're talking like 30 to 50% within minutes. It's crazy if you can get a 1 point quick move, time perfectly trade within your favor. Just going 1 point out of money on these contracts that become in the money. But anyways, with that being said, in terms of the SPY, it did the same thing it did yesterday in a sense. SPY had a much bigger gap up. If you looked at the chart, towards this morning, right around here, once we topped out at this major resistance right here, the high was 379.50. So basically in between the high of yesterday, where it had a big downside move to fill the gap, and also in between the high of Monday, towards 381. If you were looking at this, we were starting to see the backside of the move. I would say right here. This is where you can identify the backside. So we know the SPY had major resistance at 378 to 381 in the past 2 days. We also know there was a gap to fill below at 373.87, right? And it was looking very bearish because this is the backside of the move. It topped out towards that zone of resistance. It filled the gap below just like it did yesterday within time. So there's that pattern for the gap fill strategy, playing for the gap to fill below. And then in terms of recognizing the backside of the move, once it tops out at this key resistance, and then once you see that, this is your support, your strong support is right here at 378. Once that cracks and reacts as a resistance like it did on the 5-minute candle right here, that's bearish in confirmation to play puts. I was playing puts right around here on the SPY to then play for the gap to fill below. And then once the Fed situation occurred, and write this down because this happens a lot at 2 p.m. to 2:30 p.m. with the Fed and Powell speaking, so write this down. When SPY and stocks, start to become extremely volatile, typically they'll have, typically they'll do the inverse of the initial move. So the initial move right here on the SPY, which was at 2 p.m., the initial move was actually a spike. So what I'm telling you is, especially if we're towards resistance on the SPY, towards the Fed, towards Powell speaking, towards like 2 p.m., right around 2 p.m., if SPY starts ripping towards a key resistance, so right here, this is when it happened. It started ripping up. It had a nice breakout a couple points in a couple minutes. If it starts ripping, typically it'll do the inverse shortly after that. So typically the overall side of the move for the time being will be a downtrend to then play for the gap to fill below. So what I'm telling you is you see SPY ripping up and then the Fed's at 2 p.m. and especially if there's a gap to fill below, because I've seen this pattern several times, it starts ripping up, it's best to play puts. I waited a little bit too long to play puts. I played the key breakdown. I was buying puts at like 376. They printed like crazy. This dropped all the way to 373. And as soon as we filled that gap, I sold my puts for a 45% return. And that was insane. I literally sold the bottom in terms of the put side. That was my best trade. And then I wanted to play calls because I had a theory that, SPY was going to have a gap close reversal. I remember when SPY was in the 425 range, it did the same thing. It had a gap up just like this with a sideways trend, looked very, very bearish. And then the Fed started occurring at 2 p.m. and then it just filled that gap. And as soon as it had that hard overreaction, I mean, we're talking from 380 to 373. If you see SPY fill a gap that quickly and have that big of an overreaction, you have to buy the dip. So as soon as I sold my puts, I didn't get it on calls. It started spiking way too quickly. I wanted to play calls for the gap close reversal, but it just happened way too quickly. So then I told myself, this is looking kind of bearish. I'm going to look to play puts again. So once I noticed that it actually reacted as a support level. So let me go over, these are just very quick in and out scalps that I alerted within the SPY Discord channel today. I was looking at the support right here. You have very strong support at 376, very strong support at 376, 376. If that cracks, SPY gets crushed and it fills the gap below, right? So I played that for the put side on the key breakdown right here. And then when it ripped back up right here, I played it again on puts because it was turning previous points of resistance, banked on it again, and then for the third time I played puts again and it didn't work out, and that trade cost me. That was the biggest loss on the day because I didn't get stopped out right away because I wasn't using a market order. With SPY, when I'm scalping in and out like a laser focus, I'll use a market order instead of trading a limit order because it just moves so quickly with a same day expiration where you're just not going to get filled on a limit order. So I'll use a market with the SPY, because it's very liquid and the spreads are extremely thin. But I did get caught up in a put here on the third attempt and that didn't work out and that was the biggest L. But in terms of trades, guys, I think I had over 10 wins today and two super small losses and one bigger loss that took away not all but the vast majority of the profits of my biggest win. But overall, today was absolutely insane. It was a very lucrative trading day, very profitable day. The timing was spot on in these trades, absolutely phenomenal. But I did get caught up in a put on the squeeze here because my limit order didn't get filled, and then I just started selling. That was a big percentage loss, and it took away a lot of the gains from this one big trade. I had one big trade, it's a 45% win on the puts, but then I nailed puts again, and I had so many putting opportunities in between these scalps. Today was crazy. So in terms of call opportunities, when you see that overreaction, and I played calls on SPY a lot today towards the dips, did well on the call side, missed out on that huge big move though. But in terms of calls, when you see that overreaction, that massive sell-off to fill the gap below on SPY, I mean, we're talking a 7-point drop, basically a 7-point drop within 30 minutes, right? And as soon as it fills that gap below, once it forms support, once it bounces, right? So as soon as it hits the gap, bounces, you buy into that bounce, right? As soon as it hits the gap, buy into the overreaction, and then it just takes off, man. And then in terms of, buying breakouts in situations like this is another scalping opportunity I had on the call side. You have to understand that this is a make it or break it level, this 376 level. 376 is make it or break it. If SPY breaks down 376, it's going to fill the gap. If SPY fills the gap, it's likely going to have a reversal and rocket for a gap close reversal because it's oversold. It's an overreaction, right? And then in terms of a breakout buying opportunity, you look for an inverse move. 376 was strong support. When it cracks, it drops 3 points and fills the gap. If it breaks out, calls are going to go up like crazy. So if you see a 376 breakout, that's when you could buy the breakout, because once that previous support is no longer reacting as a resistance level, SPY is going to run. And you could see there was multiple times to do that. If you look right here, this is the 376 level right here. Let me erase some of these lines here so I could show you what it is I'm talking about more clearly. But you can see right here, this is what I'm talking about. I'm talking about this key support right here towards 376. Once it cracks, it sells off to fill the gap. Once it breaks out, it has a nice move. Right here, 376 to 377.30. That's a nice move. I played call options, $1 out of the money. Those made me 22% in 2 minutes. And I sold into the rip, right? I'm not holding these that long. And again, this was another nice opportunity. So if you see it break above 376, and then this is key right here that it's going to keep running, because when it had its pullback this time, it's forming a wick. It's forming a bullish wick. It's forming wicks. It's bottoming at that previous resistance. Instead of reacting at resistance when it pulls back, it has a normal little pullback and it's bottoming at that previous resistance. This is how you know that not only was there an opportunity to, again, buy calls when it breaks above 376, but there was an opportunity to buy the dip and hold into calls because it turned previous resistance into support. Very strong move. And in terms of like very, predictable moves, this was highly predictable. I specifically remember, if you go back and watch like all my videos, there was this one video where this exact same pattern occurred. And I believe SPY was in the 425 range. I believe SPY had a gap to fill at like 425. I'm pretty sure that was the level. And it did the same thing. It had this big gap up. It hit key resistance. It was a slanted downtrend. It was forming lower highs. It was looking bearish. Then when the Fed situation occurred at 2 p.m., SPY had a rip up, and as soon as it had that rip up towards that high day retest, it started crashing. And then it finally filled the gap, and then once it filled the gap, it then had a reversal. And for the entire day after that gap close reversal, it just kept on uptrending. We had a very similar move today. I specifically remember that pattern from earlier this year when this was in the 420s. In terms of like charts and patterns, I do have a photographic memory and a photographic memory in that sense, where I'll remember specific patterns in specific charts, literally just inside my mind. I'll just remember them like photographic wise. And that's another reason how I was able to kill SPY both ways today. I crushed SPY, like trading the options both ways, guys. If you were in the Discord chat, like you would have witnessed, like we're talking like 2 to 3 minute scalps for like 20% returns, 8% returns, and then I had a big 40% return, and then I had a bigger loser percentage wise, but sized in lightly. If I hit big, like I hit big on puts here for like a 45% win, if I hit big on that, I'm going to scale back in size. With sizing, I usually don't size in the same amount I'll trade. I'll usually scale back in size when I hit big on the day, if I continue to trade. But yeah, I'm working on more of a development and more of like a scalping, more of a trading strategy. There was another killer opportunity. This was another killer call. Got to give a shout out to my friend George. He's currently chilling here with me in Miami. At 1 p.m. there was a great opportunity to buy calls, and the plan was to buy calls at 1 p.m. on the first green candle, and that's exactly what I ended up doing. Sold way too soon, but took a pretty decent position size on that, and those calls absolutely printed. Did that on Amazon and the SPY. Amazon calls, guys, keep an eye on Amazon. Amazon is now a phenomenal stock, phenomenal situation to be trading options on. Extremely liquid and cheap contracts, just like the SPY. So moving forward, we're gonna have to add Amazon to our trading arsenal. I'm gonna explain why here shortly. But at 1 p.m. there was this theory that my friend George was talking about, that we were going to rip at 1 p.m. and the same thing occurred yesterday, and we played those yesterday as well. So looking at this whole 1 p.m. situation, let's go to 1 p.m. right here. So if we go to, let's see. Okay, so if we go to 1 p.m., let me show you on the SPY. It'll be more simpler. Okay. So let's see, 6:30, 7:30, 8:30. So right here, so here we go. So this is 1 p.m. So, SPY was micro oversold at the time. It was forming lower highs overall, and overall it did look like it wanted to fill the gap. But at 1 p.m., this was the key to buy the calls. Key time in terms of to buy the dip, we were at the low of day in the volume. When you see this big volume spike right here, and SPY is sitting at the low of day, and it's been ripping towards the lows recently, and it's that key 1 p.m. time period, when you see that, it's likely going to rip. So you buy into that first green candle, you buy into the bounce and let it ride for a little bit, and the calls printed like crazy, man. The same thing occurred with Amazon. Amazon right here. the same situation occurred literally right here, just like SPY. Amazon bottomed and it started ripping up like crazy. Now here's why you're going to want to put Amazon options on your radar moving forward in terms of mastering options. I would really focus on SPY and Amazon. I would really focus on that too. So in terms of Amazon, due to the 1 to 20 reverse stock split, due to the stock split, the contracts are extremely cheap now. Look at these, 2 days to expiration. We're talking contracts that are literally at the money right now for $2, right? Extremely cheap contracts. And look at the strikes. The strikes are in 25-cent brackets. So if if right now it's at 107.67. So if we can see a nice, you say you go out of the money on a call at 108 strike and you feel like those can become in the money where it rips to 108.25, nice quick 25, 50-cent move scalps, these are going to print. These are going to, like, we're talking like 20% plus prints, and then same day expirations, they're going to print even crazy. Like, these are going to print. Amazon is a very lucrative stock to be mastering options on along with the SPY. So I'm going to be adding this into the trading arsenal for sure moving forward due to the stock split. It's been highly predictable. I nailed this in the morning as well with the gap breakout. I always tell you guys, find a stock that has a massive gap down, wait for it to hit key support. Once it starts ripping up and having a strong day, buy the gap breakout. So right here, Amazon had very strong support at 101.26. Bottom right here, triple bottom here. It's been holding for 2 days trying to break out. So when it gaps down, which was right here on a Monday, you take the high of day, 106.54, the high of this red line. Once it goes above the high of this red line, there's no resistance. There's just a gap to fill above, and it's oversold. It's due for a breakout, right? So once it breaks above 106.54, you buy the calls. And if you were to buy those calls at 106.54 breakout, these went all the way to $109. It had a crazy gap breakout, and it nearly filled the gap at 109.65. It's absolutely crazy, man. So that was the gap breakout strategy in terms of Amazon. I ended up playing that multiple times today on the call side, and then along with SPY calls and SPY puts. There's so many trades in terms of like in and out scalps for like small wins, big size that I ended up doing today with the margin account. And it was just absolutely insane in terms of the results and progress. I mean, it's just crazy what you can do, man, like with the margin account. Like if you were to have like a 25K account, it's just crazy. We're talking like a 10% return on the 25K account, quick scalp. It's like $2,500 profit within minutes, just rinse and repeat. I was literally rinsing and repeating these multiple times today. So, yeah. In terms of strategies, those are the main strategies. Those are some of the trading tips I can give you guys and some of the basics in terms of the strategies. I also had a nice little trade, smaller win on COGT. I ended up playing some COGT puts this morning. I sold too soon for a 12% win. If I were to hold till end of day, those would have been up about 35%. But it was looking choppy. I wanted to get out. I wanted to play it safe. In terms of when I got out, it ripped back above my initial entry, so I'm kind of glad I got out. I didn't get back in, though, because I was focused on SPY. That's where the big money was at today, along with Amazon. But, yeah, the reason why I bought puts on COGT was, if you look at the 5-day chart, bearish, resistance, lower high. And if you just study the trend and study the pattern, and if you just looked at the daily candle, it looked like it wanted to go green to red. So when this was in the green at 9:10, I decided to play puts. As soon as I got in, it started selling off, and the puts started printing, made a 12% win on those, within, I would say within 10, 20 minutes on those. And then ever since I made that trade, I focused on Amazon and SPY and crushed it both ways on the call side and on the put side for those. It was absolutely insane, man. It was one of those situations where you just had to be there within the Discord because we were learning these real time. The spotting was so on point. So yeah, those are some kind of the strategy talks, some of the recap talk. Just really remember what I was saying about the Fed with the SPY and the initial reactions, the gap close reversal. Always buy into that fear. Always buy into that dip, no matter what. Always do it, especially at that oversold. I mean, daily chart, micro oversold. 3 days of holding like this 370-ish level with multiple gaps to fill above or due for some sort of bounce, right? So if we're gonna see a move where SPY drops from 380 all the way down to $372, right? We're talking like an 8-point drop within 30 minutes to fill the gap. Once it fills that gap, and looks bullish and, reacts to support, buy the calls, buy into the fear. And then once this previous support no longer reacts as a resistance and it breaks out and reacts to support, reacts to support, reacts to support, see this previous support right here, reacting as support, reacting as support, react to support, buy the calls. That's even a more bullish confirmation to continue for that uptrend. Just remember that setup, because this is not the first time this has occurred this year, where right before Powell starts speaking, SPY sells off hard. It was slanting the whole day, looking bearish, looking like it wanted to fill the gap. Once it cracks support, it fills the gap. That's when you know to buy the puts, when the volatility is kicking and stuff like that. Once it fills the gap, that's when you know to buy the calls. Once this reacts as support, this previous support reacts as resistance, bearish, buy the puts. This support reacts as actual support again, starts breaking out, wicks, buy the calls at those levels as well, right? Those would be the two opportunities on the put and the call side. I played a lot of those as well. So yeah, now let's talk some opportunities, and let's talk what I'm seeing in terms of SPY as of right now. So in terms of the SPY, what we're currently looking at is, I think we could see something like this. We've kind of been selling off. Look at this candle right here, and look at this candle right here. We're seeing a similar pattern like this, where it sells off, forms this candle, sells off, forms this candle, and then what starts to happen? It starts to uptrend and then sells off. It starts to uptrend and then it sells off. So overall, I would say next week it looks like we're going to retest previous support. Your previous support is at 388. I would say we're going to fill the gap at 388 at 389.80 by next week. Not saying it's going to happen this week. We're due for some sort of micro pullback. I don't think we're going to go like straight up to fill the gap at 389.80. In terms of the chart right now, it looks a little micro bullish. So I'm kind of just on the sidelines for a bit. I mean, the opportunities that I'm really seeing and what I'm really waiting for is, I'm waiting for a put opportunity at $389.80 at this gap right here. Looking for a micro put there, in and out. Also looking for a micro put at $401.44. So in terms of these videos that I make, those would be the two best levels for SPY puts. In terms of right now, I would say by next week, we're going to fill this gap at 389.80. But in terms of the call side and the videos, I'm mainly on the sideline in terms of the videos I make. Now, in terms of like the super, like not the best setups, the best prices, just in and out, very quick scalps where I hold for, a couple minutes, typically at the most, aim for the smaller wins. But if I'm trading same day expirations, they could be huge, bigger wins. Those can't really be discussed in a video. That's more of like live trading stream, or in Discord real-time analysis. There's really not much to say in terms of those opportunities in this video right here. The videos are more kind of focused on the best setups at the best prices, the more easier trades and the more bigger win trades. But if you can time a same day expiration perfectly, and get in at a good price, you can do phenomenal on those as well. So in terms of opportunities with those, with like the super micro scalps, I'm kind of just sitting right now. I have to see how things look tomorrow. A lot changes within the pre-market. I really got to see how the price action looks. I got to see if we gap up. I got to see if we gap down. So there's not much to say about those right now, but it is gapping up right now. And in terms of how the chart looks, and in terms of the patterns that I am seeing, it does look like it wants to go higher. So here's my theory. Here's my final theory. My theory is we break out tomorrow, most likely. We break above 384. I don't think we're going to be able to fill the gap. I think we go a little bit higher, and then on Friday, we're most likely going to sell off. I think we'll start to sell off on Friday. So in terms of tomorrow I'm kind of micro bullish. I'm micro bullish, looking for some sort of quick scalp opportunity. 379.20 would be one of the best prices. If it goes back to the previous closing price, reacts to support, you could try scalping a call, but you have to sell those very quickly if they don't work out. But overall, in terms of like what the chart is telling me, right? Looking at the candle, looking at the chart, and right now we are gapping up. It looks like the SPY wants to gap up. I think it's going to be challenging for this to hit 389.80 tomorrow. What I think is most likely going to happen as of now, I think tomorrow is going to be a bullish day. I think we're going to be bullish tomorrow. I think we're going to be running. I think we're going to have a gap up. A nice break above today's highs, 384, a little bit more upside overall, maybe to like 385.50. We got to see how things look tomorrow, 386 maybe max. And then on Friday we possibly see a short-term little micro bull trap. where the bulls get trapped again and it starts to sell back off, most likely under 380. And then in terms of by next week, we should be able to fill this gap at 389.80 and most likely even possibly 401.44. So those are two levels of interest for puts, especially on Friday. If we can get to 389.80 on Friday for puts, those should do well for Friday. So Friday, I'm thinking more puts in terms of trades in these videos. Tomorrow, I'm thinking more on the call side at the dips, not the rips. Do not buy calls into big rips. Buy them into the dips, right? And for puts, you want to mainly focus on the resistance, but we are macro bearish. So if you see a good key breakdown, you could try a put very quickly in and out. Now, that's the pattern I see on the SPY, guys. We are looking very bullish tomorrow for a breakout. That's the pattern I'm seeing. And here's some things I want to point out. See how, SPY recently had a gap down, Take a look at this. ULTA did the same thing, except ULTA filled this gap. This is, see how it had two gap downs just like SPY, but ULTA actually filled the gap, and then once it filled the gap, it started selling off. Went a little bit higher, but overall started selling off a little bit. So if you look at other stocks, they're going to give you an idea in terms of trend direction. And what I've noticed is in terms of how ULTA stock trades, it trades in a delayed fashion, looking at the daily candles with the SPY. SPY was already getting obliterated, it was getting absolutely crushed. Right here, when ULTA was hitting, new highs, SPY was getting crushed. And then ULTA had a delayed reaction and it followed the SPY to a T. And if you look right now, ULTA already filled the gap, and it looks like, because SPY is gapping up here during extended hours, it looks like, and SPY is actually having its first gap up. It has been gapping up, but it hasn't been holding the gap up levels. It's been selling off, and today it sold off a little bit, but then it held and recovered nicely. But it looks like, in terms of what we're seeing here, is it looks like SPY just wants to rip up to fill this gap at 389.80. If not by this week, tomorrow does look bullish. If not by this week, then by next week. It looks like it's going to be like ULTA, where it fills that second gap, that gap down, right? SPY hasn't filled it yet. ULTA has. It looks like SPY wants to fill it, so it is looking bullish in that micro short-term sense. In terms of ULTA, I want to do some leap puts. I want to do some leap puts on ULTA, potentially at, I'm going with the best level. This is a leap option idea, $422.35. Leap put options, ride this back down to 393. Go with a 420 strike. I'm going to give myself plenty of time on those, at least 30 days expiration. That's going to be a passive income leap option trade, right? So that's not like a short-term trade. That's more of like a swing trade where I hold. So in terms of swing trades, I'm waiting for ULTA to pop back up to 422.35 to play puts to ride it back down to 393. So we got to wait for it to hit the best price. It's most likely going to hit that price by next week. So yeah, that's where we're overall at in terms of current market situations. So we're due for a short-term reversal. SPY is currently gapping up. There's two gaps to fill above. It does look like we're going to be on track to have a nice green day tomorrow. It does look like we're going to be on track to fill this gap at 389.80 by next week, because I do believe we can see a sell-off on Friday. Now that belief can change depending on how the chart looks tomorrow. So we'll talk more about Friday on Thursday, right? After it close. Now with that being said, true best level for puts on SPY moving here, especially on swing trading, is going to be a 401.44, looking to swing puts around that level. So just to understand, SPY has recently cracked very strong support. It's going to start attempting to fill these gaps to rip back up to the previous support that it cracked. Once it starts to fill the gaps, it reacts as a resistance, more opportunities for puts for the macro side. We are very macro bearish. We're going much lower this year, like I've been saying. And we don't look bullish at all. Now for the micro, for the short term, it looks like it wants to, within time, by next week, it really looks like next week, it's going to want to fill some gaps and start to fill those gaps. And then once we start to fill those gaps, those are going to be opportunities to scalp puts, to scalp on the put sides. So in terms of other things I'm looking into, in terms of Tesla's at a make it or break it level, 696. If Tesla can break above $700 and hold, we're going to start to see a breakout to 720 to 725 on Tesla. In terms of how is Tesla looking right now, bullish. Tesla's looking very micro bullish. If we can hold 696, think of this as your key level tomorrow. 697 to $700. If that zone reacts as a support, Tesla's going to rocket tomorrow. If that holds up, reacts as support, starts to break out, Tesla's going to start rocketing to 720s. If it breaks above 720s, which will be tough, but if it happens, then we go to 740s. So that's the thoughts on Tesla right now. Keeping an eye on AT&T. AT&T starting to get interesting. Lucid starting to get interesting. I want to see how Lucid reacts at $18.02. So Lucid did sell off and fill the gap like I expected it to do. I talked about that towards the end of the last video I posted. And then we discussed how there was going to be a great potential call opportunity to buy when it fills this gap right here at 1569. It never filled the gap. It got to a low of 1580, but it did have the reversal like we were discussing, and it did rocket back up to start to fill this gap. So what we're waiting for is see how it sells off. It fills the gap right here, then it sells off, right? So here's what I want you to understand about Lucid. There's still a gap to fill below at 1569. Things are still macro bearish. There's a gap to fill above at 1802. Lucid had a gap breakout as well, just like Amazon and a lot of other stocks. So the gap breakout strategy worked today on the call side. I played it on Amazon. So for Lucid, 1802. Once we can, we gotta wait. Once it reacts as a resistance, so if it just breaks out, it's holding, we don't do anything. What I'm telling you is, when we go green to red, when Lucid fills this gap at 1802, and it goes green, we wait. What are we waiting for? We wait for it to go red. When it goes red, below 1802, forms a lower high, looks bearish, play the puts on the under $18 crack, right? But you got to wait for the gap to fill first. You have to wait for it to go from green to red. Ride it back down to 1750. Ride it back down to 1752. Scalp those. If this occurs on a Friday, this idea I'm giving you, whenever it's going to happen, whether it's tomorrow or Friday, the puts are going to print substantially. Within a 50-cent move of puts on Lucid, we're talking like a 40 to 50% return. Like you guys saw what I did on the Friday expirations. Lucid only dropped 40 cents from my entry, and the puts that were 50 cents out of the money, as soon as they became at the money and it went 50 cents in my direction, the puts were up 90%. So pay attention to that Lucid play. Pay attention to that this week. Other than that, those are really the main setups. Those are the main plays that I'm seeing. Amazon just filled this gap. So see, this is what I want you to be aware of. Keep this in mind. Just like ULTA, Amazon, gap down, ULTA, 2 gap downs, right? It gap down, it gap down. The SPY, gap down. Now, if you look at the stocks, a lot of the stocks, like Amazon, like ULTA, they've already filled their second gap down right here. And, right here, they've already filled their second gap downs. And then once they fill their second gap downs, they had a small little sell-off. Amazon hasn't filled it yet. It almost did. But keep that in mind, because SPY it's not even close to filling that gap at 388. There's still plenty of room to run for the micro, right? So just keep that in mind. A lot of these stocks have already recovered enough where they filled their second gap down, and SPY hasn't yet. So it's like I'm viewing it as a delayed reaction. I'm viewing this as, SPY within some short-term time here is really going to start to rip back up and fill that gap. And then once it fills the gap, we look for micro puts, right? So just keep that in mind. Now, in terms of how does the VIX look? This is what I want you to understand about VIX, and this is what's crazy, man. These gap close reversals. Look at the VIX here. The VIX had a gap at 27.75. As soon as VIX filled the gap, it started pumping, right? So the crazy gap close reversal opportunities you can do with these. If you looked at the VIX, man, this overreaction, pay attention to these overreactions. This is what you call an overreaction. Look at this. This is crazy, man. Look at what you could have done on VIX today. And remember, these crazy ones that I'm showing you, these always happen on the Fed days. They always happen on the Fed days at like 2 p.m. But look at this. VIX had a gap to fill at 32.69. This is an insane move for the VIX, right? It gaps down. It instantly fills this gap within minutes. This is a crazy move. As soon as it fills the gap, that is when you play the puts. That is when you play the calls on the SPY, because when it fills this gap, VIX is going to crash. VIX was looking overall bearish. And then it ripped up with the Fed meeting. And like I told you guys, the first move up, VIX had was bullish. And what I tell you, the initial reaction usually does the opposite. So if VIX is looking bullish to fill this gap and it has an overreaction to fill this gap, play the puts on the VIX or do the inverse and play the calls on the SPY. So if you see VIX gap down and then it just instantly rips up to fill a gap like this, especially during these Fed situations, play the puts on VIX or buy the calls on SPY when the gap fills. And here's the crazy part. Look at that. That was gap close reversal opportunity right there on the VIX for the puts, and using the gap close reversal strategy for VIX puts or SPY calls. And then look at this right here. We had a gap to fill. Let me disable extended hours so you can just see how clearly this is. And this is why you always got to watch the VIX. Always watch the VIX when you're trading the SPY. Just look at how crazy this is. You could visually see right here. VIX hits the previous closing price. It sells off. Opportunity to buy SPY calls. VIX massive gap down, instantly rips up. That's an overreaction. It's opportunity to buy puts into that into the rip. Not even like wait for a green bar, just buy puts at that best price. Don't even like wait for the red bar, just buy at the best price. Certain trades you don't need confirmations. It's more of just price and understanding like market psychology. Like it's market psychology. If VIX is gonna have a massive rip like that to instantly fill the gap, then that's an obvious situation to play puts for the reversal on VIX and then to buy SPY calls. And then same thing right here. If it's gonna have even a bigger overreaction and just get absolutely annihilated and then fill this gap right here, once it fills this gap right here at 27.75, you buy the calls on VIX and you play the puts on SPY. So that was 2 gap close reversal opportunities where you could have played a put on VIX, a call on VIX, or a call on SPY here and a put on SPY here. Phenomenal opportunities, guys. That's what the best setup looks like. That's what the best prices occur. So for people who are saying, this isn't predictable with, it's gambling, this isn't predictable with the whole Fed situations, if they just looked at the gaps on the VIX and on the SPY, they would have realized these overreactions were gifts for trend reversals. Do you really think the people buying calls right here are going to win? Do you really think the people buying puts right here are going to win? No, because these are massive overreactions. Whenever you see a massive overreaction and then a stock fills the gap from that overreaction, do the opposite. So if you see VIX have a massive rip up to fill this gap instantly like this, play puts on VIX or buy calls on SPY. If you see the VIX have a massive crash to fill the gap below, then play calls on VIX or play puts on SPY. This is highly predictable, man, and I've been crushing it. Today was the biggest day of the week, man. Monday and Tuesday, very slow. Not much trading, just in and out. Didn't do much at all. Nothing too great, nothing too crazy at all. Just very small wins. Today was a game-changing day, man. Today was on point. 100% A1 setups. So hope you guys have learned a lot from this video. Make sure you subscribe to the channel, smash the like button. If you do want to be a part of the private group Trader Society, all of the information is explained down below. Click the first link in the description. Read the entire page, watch the short video. It explains everything. You do get lifetime access. It is a one-time fee to join the program. As soon as you join, you get instant lifetime access. You can start trading with us live at Market Open, where you get to watch me trade live on stream at Market Open. You also get access to the video lesson library where you learn, the trading strategies, the price action trading strategies, the gap trading strategies, the full trading system, risk management, position sizing, psychology, the price action trading, scalp trading, and then also how to trade the best setups at the best prices for more of the bigger wins, the bigger moves. And then there's also laser scalp trading, which is something I've been working on, where you just get in, you get out within minutes instead of trying to hold for a much bigger move. There's 2 ways to trade these in a sense. I've been working more on the scalping side lately, especially when the market's like more dry and choppy. There's been really good scalping opportunities lately. But in terms of today was like big win scalping opportunities. So much opportunity to use both of the strategies, both puts and longs. So if you want to learn how to trade both ways, if you want to learn how to trade the options, this is going to be the right program for you. You do also get access to the video lesson library, the Discord chat room, the chat room with all of the channels within the chat room, the moderators. You can send us direct messages. The live trading stream would be like one of the most valuable assets to the program, because you get to watch me trade these options live at Market Open in real time. And we are going to be adding more of we're going to be doing more voice channel styles, because what we noticed is there's 2 types of opportunities. The first opportunity, which is more ideal for a smaller account, is where you're trading the best setups at the best prices. You're aiming for more of a bigger win, something you feel more comfortable holding. That's more ideal for the small accounts. Now, if you have a margin account and you're just trying to scalp, you get in, you get out, you take a bigger position size, you get in and out within minutes, you cut your losses super quick, let your wins run for a little bit. I'm talking like super quick losses, right? So the trade develops more on timing it perfectly in a sense. If you're going with more of a short-term expiration, if you're not good at timing, then you would go a little bit further out in the expiration so you can hold it a little bit longer. But there has been, in development, more of a scalp trading strategy where you get in and you get out within minutes. We're talking like 1 to 5 minute trades where you instantly get out for like a 5 to 10% return. If you're trading same day expirations, it could be a 20, 30, 40% return within minutes. So that's something that's in development as well. It's more ideal if you have a margin account. It's not as ideal for cash accounts. It's not as ideal for smaller accounts. That's more ideal for margin accounts. But on those trades, you get in, you get out like that, and losses tend to be small for the most part. And the wins can run. The wins can run very quickly within a couple minutes. We cut them fairly quick. But yeah, if you're trading, during that Fed situation in the middle, though, that's where it gets dangerous. That's where it gets overall dangerous. But you'll learn both trading styles. You'll learn both ways of how to trade. This program, it's great for small accounts and large accounts as well. So yeah, it's the first link in the description, guys. I'm going to be wrapping up this video. Tomorrow is going to be a phenomenal live trading session. Friday and the Friday expirations, those should be a phenomenal trading day. That should be like the best day of the week on Friday. So I'm looking forward to training with you live at Market Open. And like I said, we're going to be doing a lot more of the voice channels because, what I've noticed is in terms of like alerts and people who send out alerts. So I just want you guys to understand in terms of alerts, they're not for you to blindly follow. It's to use as a scanner. It can also be used as an education to see what someone is doing in real time, and then you can see them trading in real time, right? It's not used to blindly follow. But with that being said, in terms of alerts, and what I've noticed is there's two types of styles. There's the style where you trade the best setups at the best prices and you're confident in the situation, you're aiming for more of a bigger win and you're kind of holding it a little bit longer, typically like at least 30 minutes. And then there's the other style where you try to time it more perfectly. The trade is meant to be held for like a couple minutes. You're aiming for a much smaller win and you're going to cut your loss super quick, and it's more of a bigger position size play. That's like a super quick micro scalp. So just think about this. If we're doing super quick micro scalps, a live trading stream is ideal, but there can be a 10 to 30 second delay. It all depends on where you are in the country, but there is a slight delay on stream. And there is also delay for someone to type out the alerts. When they enter a trade, they have to type out that alert or post the screenshot of the trade where they don't even type it out, right? But there's a delay in that as well. So what would be the solution to get 100% real-time alerts? And if you think about it, the only real solution there would be is a voice channel. If there was a voice channel on Discord where someone, is telling someone, I'm preparing to buy calls here, and they explain, which calls they're preparing to do. They explain with their strategy. They typically stay out the money, or they go 1 point out of the money, so people already know. And they typically go with the same expiration, so they already know in hindsight what the expiration, what the contract is expected to be. But that can all be prepared on a voice channel. And then as soon as they get in calls, they could say, I got in calls, and it's 100% in real time because it's on voice. They can say using their voice as soon as they get in the calls, instead of using a live stream that has a 10 to 30 second delay depending on where you are, or instead of typing out the alert, which has like, probably a 10, 20 second delay. So you just have to understand the best way in terms of those quick micro scalps, especially with options, because guys, I'm telling you, if you're trading the quickest expiration, the ones that expire the quickest that SPY has to offer, you can make a 10-20% return within a minute. Like one of the best trades I had was on a SPY, I think it was a SPY call today. It was a 27% return in 1 single minute, right? So for that to even be possible for someone to see in real time, that would have to be in a voice channel. There's just no other way. Now, if we're aiming for more bigger moves, then it's not going to be the biggest. It's not going to be the biggest thing if it's on stream. But like what I'm saying is, if someone is on point with their timing, then real time is the most important thing. But if someone's completely not on point with their timing, then you would actually want a delay. If someone's not on point with their timing, you would actually want to delay because you would get a better entry than them. But if someone is on point with their timing, then you wouldn't want to delay at all, because that would mean that you're going to miss out on a huge portion of the move, and you most likely be getting in when that person is exiting because the move that they wanted has already occurred within that minute, right? So I just want to bring awareness to that. We are going to be a lot more focused on voice channels, because voice channels are 100% real time. You just have to understand, if it's not a voice channel, then there is a slight delay. That's just the reality of this whole trading situation. With that being said, guys, if you do want to join the Discord, if you do want to join Trader Society, it's the first link down below in the description. I'm going to be wrapping up this live trading session. Thank you guys so much for tuning in. I will see you within the next one.